what factors you consider most important for the multifamily acquisitions?
Oh, the major factor I consider, because I always say this, you make money when you buy. The acquisition process for me for multifamily is the key to the entire process. So one thing I look at is the macro, not just the macro. I look at the macroeconomy. What is the economy saying? What is that market saying? Is the market growing? Is there demand for what I want to provide to them? I look at which of the market has the opportunity to grow or which one will be declining, because we have some markets that are actually declining right now, but 5 years ago they were not declining. So I'm looking at the long-term projection. I'm checking what that is like, and I'm also looking at the way cap rate has been affecting in the past and currently. So I'm checking inflation. I'm checking so many things that will affect that property that I do not have control over, and see how I can mitigate them.
This is the Real Estate Vibe Show, and I'm your host, Vinki Loomba. As a real estate investor and a fund manager, I'm always excited to explore the world of real estate opportunities with you and for you. And today, I have a very good friend, Bibi Ofiri, with me. Welcome, Bibi, to the Real Estate Vibe Show.
Thank you, Vicky, for having me again.
Thanks. I'm super excited for our conversation today to learn about your journey. So a little bit about Bibi. Bibi is a seasoned multifamily investor and a sponsor with over 13 years of experience in asset management, acquisitions, and underwriting. As COO of Blue Ocean Equity LLC, she oversees 65 million in asset under management across 1,027 units, delivering impressive returns for her investors. A passionate educator, speaker, and mentor, Bibi empowers others to achieve financial freedom and scale in multifamily real estate investing. Awesome. I love that bio, Bibi. This is super awesome things that you're doing. So, like we all know, there's multiple asset classes within real estate, and single family happens to be the one. Single family real estate investments typically focus on individual homes, offering simplicity and lower entry costs, but limited scalability. Multifamily investments, on the other hand, involve properties with multiple units under one roof, providing opportunities for greater cash flow, economies of scale, and operational efficiency. Scaling from single family to multifamily requires a strategic shift in mindset, financing, and management as investors navigate larger deals, higher stakes, and potential for exponential growth in their portfolios. So our topic for today is from single family to multifamily, essential strategies for scaling your real estate portfolio. And this is the journey for our awesome guest, Bibi, today, because she moved from single family to multifamily and scaled at a larger scale. That's the way I'm going to put it. So welcome again, Bibi. So I'm going to ask you, in your opinion, how do you see multifamily different than the single family investment?
Multifamily versus the single family it has massive difference, and let me just explain them so that anybody that is listening to this can understand. So typically, a multifamily, it's really based on the operation. So the better the operations, the more valuable the property becomes. But for a single family, the reverse, I would not say the reverse, it's not contingent on the operations. Let me emphasize on that. It's not really contingent on the operations. It's more of the comps, the comparables. So whatever a similar property is doing in that market, that would be the worth of your property. But for multifamily, the difference is that apartment B might not be performing well. Maybe he has bad property manager. Maybe he didn't buy it well. He didn't do so many things where he was not able to increase rent, was not able to reduce rent. That maybe has affected the net operating income, which gives us the value of the property. So if you're not able to manage your property well, you find out that such property will lose value. So that is one advantage of multifamily. I can decide how I control how profitable my property can become versus a single family. Aside from that, for a single family, for a multifamily, it gives me the economy of scale. How do I mean? I can decide to scale just with one property. So from 0 to 100, just in one closing, one property, the same location, everything is in one place. But for a single family, it's difficult because from someone that was coming from the background of buying about 50 single family, I knew how difficult that was. They were all in 4 different states, and the management was very, very tedious for us. One, we didn't have a property management company to help us manage them because they were all scattered around. So I ended up carrying that labor of managing it myself, and it was preventing me from scaling. So that is what multifamily will do for you. One location, one property management versus a single family that could typically be scattered around different locations, and you can't get anybody to manage them for you. So these are very few points, different things that I can mention, but there are lots more. I can go on and on.
That's true. I come from a single family background too, and I hated those tenants, termites, and toilets. I was like, okay, don't want to deal with it. And me and my husband, we both come from the corporate world, so that was kind of our side gig, having this small little portfolio, try to manage it ourselves, and not having the property manager there. That was the other big thing for us. So it was like super hard. But when we move into multifamily and we scale there, we really enjoy the process in multifamilies. Basically, we started as a limited partners. So for limited partners, when you're coming into multifamily investing, you're like passive investors. You're just like sitting back and seeing the magic happening in
Joy.
front of your eyes.
Mm-hmm.
Like it's basically, I used to be like, I'm active investor as well now. So I do my active deals. But before that, I started as a passive. I was just feeling like, okay, I hired this company to make my money grow for me, basically
Exactly.
giving the money, okay, take my money and
Mm-hmm.
multiply for me, basically. And I'm just seeing 10 feet away and I'm seeing all the good, the bad, and the ugly. I really enjoy that process.
Mm-hmm.
What inspired you to do it, going from, you said 50 properties,
Yes,
a single family, and then it was pretty good portfolio right there for you too.
exactly.
Moving to multifamily, how did you do
Yeah.
it?
Yeah, you might say that that was a pretty good portfolio, but in the back end for us, that was not, that was stress for us. And let me tell you why. Because yes, we found out that we're making money, but if one tenant leaves, we've had a case whereby 4 months we'll not be able to rent out the unit. So within that 4 months, what happens? No income is coming, and God bless you, is a condo. Let's assume you that property is a condo, you'll be paying HOA and all those things and all that, because we had some condos as well in the midst of everything. So that was not even profitable for us even at that time. So yes, the money was coming in, but sometimes you can take a year or 2 years profit to do a renovation after the tenant has left. That was one of the things that made us to start thinking another way. So because of those reasons, and besides that, when you're buying those properties, single family, you're typically using your money. And one thing about investing in real estate, really, what you want to do is more of leverage. You want to use other people's money rather than yours. So, for example, if you are buying single family and you're using them for long-term rental, it will be difficult for you to get someone that will want to give you a short-term loan for that. So, versus a fix and flip. If it's a fix and flip, you might get someone because they know you can turn around and pay them back. But if it's a rental you want to use it for, you have to bring down, if it's not your primary resident or your secondary resident, you have to bring about 20 to 30% down payment. And if you do the calculation for those properties, for 50 properties that we had, that was massive funds coming from us that could have been used, channeled to somewhere else, and used other people's money to scale better. So single family, that was our major reason, because we found out that our cash was depleting. we're spending more and more and more of our monies because we didn't have the advantage of using other people's money. So we decided to start up syndication, multifamily with syndication, which gave us the ability to pull funds from people that is not our money and still own reasonable equity on those properties, and doing that with less of our monies coming being invested in the deal and all that. So that was the turning point for us because our funds were depleting. We just needed to look for better ways of doing things.
Yeah, that's awesome. I think similar thing was with us too. But single family, like you mentioned, using your own money. Some people are comfortable with that. There's no good and bad. Some people, they're comfortable. They want it to say, they say that I want it to go 100% myself. I don't want to involve anybody else with me. So this is my thing. But like you said, the growth is limited. You can go only so far. And if you're leveraging too much, like leveraging means you're pulling the equity out and putting into the under single family, you're kind of, over leveraging yourself. And that could be good and bad too at some point, given on the market conditions. You cannot predict the future because I've seen in my lifetime multiple operators who had hundreds of these homes, single family homes, there's thousands of single family homes. They went down the drain because there's over leverage because all the equity was pulled out. So that could happen too. But I think that's where I think multifamily comes into place is more like a scalability point because, like you said, it's a better leverage because multifamily is treated as a business. It's a business more than a real estate investing, like we look at the single family.
Yeah.
And you
I
have
want
to.
to put a spotlight on something you said. This is what I tell people. There is no good way to go into real estate, really. It just depends on your end goal. What do you want to achieve? If 5,000 is that freedom money for you, and you feel single family can do that for you, please be my guest. Go right ahead. But if you know your goal is way bigger than that, then I would suggest that you start thinking of pivoting to multifamily.
That's true. And multifamily, like I said, is a business because
Yeah.
you're getting the rental income and all the loans and everything, all the docs are done based on the income, like how much
Yeah.
you're netting from there versus you going 30% down, 40% down in the single family. And then I think you're mostly evening out if you have a smaller portfolio on the single family until unless you have somebody like yourself, you had, 50 single family homes. That was like quite a big portfolio. So I'm
Yeah.
gonna ask you this question is coming to my mind, coming from that big portfolio, having 50 single family homes, it's a large portfolio actually, I'm looking at mine, I had six, I couldn't handle it. I'm like, okay, I need to wash my hands. Thinking about it, it gives me
Yeah, I
jitters.
can imagine.
So what was your biggest challenges, when you're scaling that single family portfolio? If you can go back a little bit into your life and give us a little bit sneak peek, like how did you get started first with the one single family and how did you grow? And what was the challenge, going through that scaling process?
Okay, so how I started with my single family was based on opportunity. So coming down to the US was not by choice. I came to do something else and go back, but I found myself in a situation that just had me stay here. I don't want to go go into that rabbit hole right now, but the reason why I went into multifamily was because in my home country, I was a property manager. So I had a
Mhm.
property management company. So all my life I've known real estate, but I've been at the servicing end, not as an investor end. So I knew the in and out of how to manage properties. So coming down here was the same vision, but regardless, I lost focus. So that's why I still went to do IT in information systems and cybersecurity until later I came back again and said that was not the route I want to go to. I want to do what I know and love. So that was how I started my multifamily. I mean, that's how I started single family. So at that point, that was all I knew. I didn't know there was anything multifamily. I just thought I had an impression that people doing multifamily are the billionaires. So it's a no-no. It's a no-go area. Just leave it for them and start with your single family. And if God helps you, fine, you can now become a billionaire and start getting those properties. So it was the knowledge I had, what I knew at that point, that was what I was relying on. So that's why I kept going and going until you get to a point where you've got into your peak at something and you say, no, there should be something, there should be a better way of doing this. If everyone was doing it this way, then it's difficult, So I found out that there were other ways. So I went on YouTube to start searching. So YouTube was my first point of call. I said real estate for dummies. That was my search. I looked for that because I believe that if I say dummy, they will give me everything in the simplest way for me to understand. And that was how I saw Michael Blank on it. And I was like, okay, fine. So I could do this with other people's money and all that. So starting my first multifamily was out of, should I say, coincidence. One of my agents that was giving us single family to close on had a personal properties, multifamily, that was 5 units at that time. She wanted to sell in Pennsylvania. So she asked us if we were interested. And being that I was already looking for better ways of doing things, I said yes. So we went down, we flew down there, and she showed us the property. I mean, fortunately for us, because right now, I'm happy we didn't close on it. Fortunately for us, the deal did not close, but it enabled us to create a relationship with the broker that was on ground, because there was another broker on ground. So we created that relationship with him. A few months later, he called us and asked if we were interested in a 20 unit. And we're like, sure, why not? Send us the documents. And he did. And it was an off-market deal. Everything went well. The rents were extremely low. The market was at 900. This rent was 300, 400. So we had about 500 to about between 300 to 500 and to increase the rent. It was so exciting. And the day we went to close, the next door neighbor, just the same building beside it, saw us and said, are we the ones buying this property? And he said, do we love to buy is? And we're like, yeah, sure, why not? So we put that. So that's how we kept going and going, So that was how we started scaling our multifamily. So it's not the typical way people do. They start with being an LP. I didn't start with being an LP. I started from single family and straight to operating it as a JV partner with just one single partner. Then from that, I went to do LP. So I started managing my properties. Then I still went ahead to do limited partners. And someone will ask a question, why did you go that route? And my reason for doing that was I wanted to create more relationship with operators, bigger operators than I was. And I think that was a criteria for some of them that I should invest in their deals and get to know them, and also why I did that. And yeah, so yeah, we are.
Yeah, I kind of did the same thing. Like I told you, I was in the corporate world. I was I was the IT professional or executive for multiple years. And then I had the single family portfolio, very small one. And I got my realtor license, a California realtor license. I was selling the retail businesses. So I
Okay.
have some knowledge in the real estate space. But when I learned about the syndication model, I was new to that too. I was like, okay, what the heck is that? So I started investing as a limited partner too. It's not just because other people wanted me to invest with them. It was more like for me because I wanted to learn myself what the process looks like. Just like I said, from 10 feet away, I wanted to see what the process looks like, how it feels. Because there's a mindset shift, whatever we do, whether we are going from the single family to multifamily, or we are going from the corporate world to the real estate world. It's like our mind gets wired certain way, or it is already wired certain way, but whatever we do, we are creating certain experiences and we start getting comfortable in that experience. And we
Mhm,
want it to stay there, right? I can bet
mhm.
you today, if we find somebody new in the corporate world or even in the single family world, we go talk to them and tell them about the multifamily. What is going to be the first answer? The answer is going to be, oh, no, 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 no. I don't think I know this, or this is not my cup of tea. I am happy where I am. So it's a
Mhm,
learning process. So I wanted to ask you this.
mhm.
Since you had the real estate background, fine. You came from Nigeria, you had the previous life over there in real estate, fine. You came here, you started in the IT world, perfectly fine. Then you
Yeah.
started your single family portfolio and
Yep.
then transition into multifamily. What was the mind shift right there? That can do it attitude, which is like awesome. Not everybody has that. Let me tell you that. So share with
Yeah.
us.
Yeah, so there was a significant mindset shift at each point in time. So for me being into IT and moving from there to single family, that was a mindset shift because one is you are an entrepreneur on your own, and the other one is your paid salary and all that. So my point was, do I want to start out like this without a constant income coming to me? How do
Mhm.
I cope during the period that I'm transitioning? So that
Mhm.
was one that was in my mind. Then the second issue I was having at that point is I think what made it easier was because of the foundation I already had with real estate. So that kind of gave me an assurance that going from this to this was good. So now the other part is from the single family to the multifamily. At first, I was just diving into it and knowing that there was a difference in it. So imagine you just diving into a pool and not even checking if the pool is warm or cold. So it was at the process of diving into it, then I realized that it's cold. No, it's warm and all that. So, but in this case for me, the biggest challenge I faced was the mindset shift. The way things are done with multifamily is significantly different. So if you take, for example, the way you do your offers. For single family, the offer process is, the acquisition process is different. So when I'm presenting an offer, is different. There's a negotiation part that goes on in the form of letter of intent between you and the seller when it comes to multifamily. But for a single family, you just submit your offer, they'll counter, and that's it, you're done. So until that negotiation process is over and done with in the multifamily space, maybe has accepted your letter of intent, then you now have your PSA. That one is through a legal process and all, everything is different. So for me, anybody that's trying to transition, first of all, you must leave an open mind and be ready to unlearn and relearn. So that was what helped me. I had to unlearn the things I had known about single family and create a space to relearn multifamily.
Oh my God, I love that how you said you unlearn and then you relearn certain
Ye-
things. A lot of people are not open to that, right?
Yes.
Because I have seen that in my experience. I know some people in my experience, they are like my way or highway. What is
Yeah.
learning and unlearning, you know? Learning
Yeah.
what? It's like, okay, I know already everything. What is there that you're gonna teach me kind of thing, you know?
Hmm.
So I know those kind of people too. In my lifetime, in my experience, I have that too. So developing that mindset, that's called growth mindset, you know, unlearning and learning, or just trying new things. Where did you get that? Like you were instilled in with that from the very beginning, from the childhood, or is this something from your experiences brought that to you?
Yeah, my experience has brought it to me. One thing I like about myself is what if I don't know something, I say it, I don't know it, and that gives people the opportunity to open up more and let me know. So, for example, when I was interacting with broker at the initial stage, some of them I just told them where I was at that point. I told them I'm from a single family background, but I've achieved a lot and I'm just coming into this, but I know that I'm very good. Some of them I opened up that way to them and they were really ready to help me, to hold my hands, whereas some pushed me away. So for those that were really, really ready to help me, I took that ability to learn. So if you are present in my conversation when I'm talking to a loan broker at that time or acquisition, it's like I'm picking their brain, I'm learning, I'm asking questions. So the opportunity for me to unlearn and relearn is that it's like humbling myself,
Mhm.
telling myself, what you don't know, you don't know. You have to learn it, So I had to give myself grace to learn again and not say because I've achieved 50 units and that. So that's one thing people should learn to do, to humble themselves, to learn. You become masters one day in it, but before you get to that point, you need to just be humble enough to just learn. And I think you'll do great if you're very humble.
I agree on that 100%. I couldn't agree more because you need to know your strengths as well as your weaknesses. And I think that you should know about your weaknesses more than even your strengths,
Yeah.
because that's gonna make you strengthen you more. Because as soon as you're gonna start learning about your weaknesses, you're gonna start filling in all the gaps.
Mhm.
And then you're gonna get to with a better vision, or get a better version of yourself. And that should be the goal for everyone. You mentioned a few key items in the when you were talking earlier. You said there's a lot of things that you do differently in the multifamily, like you have to do a PSA. PS is a purchase sale agreement, which I'm not sure is different for the single family, a lot different, not just different. And then the financing is totally different. So let's talk about that a little bit, how the financing works in the multifamily compared to single family. Just give us a snapshot of that, your experience, especially
Yeah.
that big portfolio. How did you move away from that portfolio?
Yeah, so for the single family, financing was simple. I had to just partner with one person that
Mhm.
had the cash. Then I was the one bringing the sweat equity. So he was the cash and I was the sweat, the operations on that one. So that was a very easy process. So I'll get the deal, do the acquisition process, then he funds the deal with the down payment and we move on. Simple.
Uh-huh.
But for multifamily, it's a different perspective. So you are getting a multifamily, and depending on the raise, you now determine. So if it's a small raise, you might say, I want to do a JV. That means I want to partner up with people that are going to bring something on the table, money, and as well as being active on it. Or you say, oh, no, it's a big raise. We can't do that. I want to do syndication. And you might say, oh, instead of doing that, I want to be involved in funds and all that. So there are different ways deals can be structured or financed in multifamily. So for multifamily, you can go through for the bigger loan, the first loan, you can do that through a bank, an agency loan, and all that. But for single family is, I mean, it's more of banks that do those kind of funds. You don't have, especially when they are below 1 million, you don't have the agency banks interested in anything below 1 million and all that. So single family does not have some advantages that the multifamily does have. But let's put it in quote. The multifamily gives the ability for you to exit easily. But single family, you can decide to be there for 30 years because the loan itself is 30 years and all that. But for multifamily, it is structured in such a way that you have to exit. You must do a full circle and come out. So it's structured in 3 to 10 years. We don't have that ability for single family. So for multifamily, that structure helps you. It just helps you come in and go out, pull out money, put in money, reinvest. It's like what we said before, it's more of a business. So the financing, the way funds are pooled is just different. You can't just take funds from investor without going through the SEC process. You can't announce it. If it's a 506B, if it's a 506C, you can announce it. But for single family, you don't even do that because most times the money comes from you. So who are you advertising to? Who are you pulling funds from? So it's just different. So that's why I said you just need to unlearn and relearn so that you don't get yourself in trouble when you are doing the financing part of it.
Yeah, and the managing is so different too. And when you're getting the loan, single family, you're on your own.
Mm-hmm.
Because you're just getting qualified on your own and then you're getting the loan. But with multifamily, like you mentioned, it's a whole new game, is like because we consider it as a business. So the loan is given to the business. So like how much money this property is making accordingly, that's is decided. And then you're bringing in other partners or other investors alongside with you to take the deal, down and then 3 to 5 years or 10 years, whatever your timeline is or whatever your business plan allows. Accordingly, you structure the deal. But here, what is a key important thing is getting the deal under contract or getting the deal down is not the only thing. Because
Mm-hmm.
the deal starts or the work starts when the deal closes.
Exactly.
After that, because you're going to start implementing your business plan or whatever you are projecting or whatever you're promising to your investors. Okay, this is how we're going to manage the property. And the management of the property is really, really important because it's just, business plan that you set it up when we got the property down at that time. Now it's time to follow that business plan and how closely you follow that. That's the important thing. And for that, you need to have some operational strategies that you put into place, right?
Mhm.
So I would like you to talk about that. How
Yeah.
did your operational strategies change from single family versus multifamily, and
Yeah.
how easy that transition was?
Yeah, so but before I say that, let me just point out on the financing part. The single family, the financing part is really based on that's coverage ratio. So
Right.
what's your debt to income? That's how they give you the loan. But
Yes,
for a
yeah.
multi-family, first of all, you must have a net worth equal to the loan. You must have liquidity. Whoever is a guarantor should have about 5 to 10% liquidity and all that. So it's just way different. So let me go to what you said. For how I was able to differentiate between when I was a single family person managing it and now that I'm a multi-family person managing it, I had to wear two different hats. So as a single family, I was a property manager. So I was hands-on. That was a day-to-day operations of single family. So, but for multi-family, like we both noted, it's a business. For a multi-family, you involve the property manager. So as an asset manager, I recruit the property manager, especially for units that are 70 and above, because they can cater for a property manager. So do I want the property manager to be on site or out of site? That would depend on the number of units. So for properties that are 70 and above, yes, you can have an on-ground property management company. So right now, the hat I'm putting on as a multifamily operator is of an asset manager, not a property manager that I was in the single family. So as an asset manager, my role is different. I am not doing the day-to-day operations of the unit. What I'm doing is basically I am supervising a property manager. Not just that, I'm ensuring that my business plan is achieved, and I'm doing that with the KPIs I've created for them to follow based on my business plan. I am monitoring that to ensure that they are doing the job, and I'm also monitoring it weekly and monthly. I'm ensuring that everything aligns to the plan. Aside from that, I'm also, as a property manager, my work is not just in the microeconomy of the deal. I'm also doing it's not also the micro, also the macro economy. I'm checking what the market is doing at every state in time, because that will also affect my deal, especially at exit or at acquisition point. So if, and as an asset manager, I am busy taking care of the toilet, I'm busy taking care of the tenants, that will not give us the opportunity to do because that's a bigger picture. That will not give us the idea to do the bigger picture, because at every point in time, yes, you've created your business plan, but you should also know that your business plan should be flexible in case opportunity comes or you see something that is going to happen. You're forecasting it as an asset manager is for you to pivot and know, because this is going to happen in a few years' time. Yes, my business plan was to exit in 5 years, but I have an opportunity now to exit in 3 years. Interest rate is low. Yes, I'll be slammed with 1% prepayment. So I'll look at the advantages. 1% prepayment versus staying for another additional 2 years. Which one would better off my business plan or better off my investors? Those are critical decisions an asset manager will wear. So as a multifamily expert or a sponsor, you're wearing a different hat compared to a single family that is just wearing a property management hat.
That's so true. And there's a difference between the property manager and asset manager, because property managers cannot do your day-to-day routine things, like you did that in your past when you had a single family portfolio. You were a property manager. Now you're asset manager. Asset manager is more like you were high level managing the asset because you're working alongside the property manager. You're basically managing the property manager, getting the reports from there, kind of working, aligning that to your business plan, and then see what the gaps are, and directing them, do this, do that. I love that. And now the most important thing that we didn't talk about that is underwriting. So how the underwriting is different is there's a huge difference between the single family and the multifamily. So let's talk about that, how the underwriting differs and what factors you consider most important for the multifamily acquisitions.
Oh, the major factor I consider, because I always say this, you make money when you buy. The
Mhm.
acquisition process for me for multifamily is the key to the entire process. So one
Mhm.
thing I look at is the macro. not just the macro. I look at the macroeconomy. What is the economy saying? What is that market saying? Is the market growing? Is there demand for what I want to provide to them? I look at which of the market has the opportunity to grow or which one will be declining, because we have some markets that are actually declining right now, but 5 years ago they were not declining. So I'm looking at the long-term projection. I'm checking what that is like, and I'm also looking at the way cap rate has been affecting in the past and currently. So I'm checking inflation. I'm checking so many things that will affect that property that I do not have control over, and see how I can mitigate them. Yes, they are there, but I need to look for ways to mitigate them. So how can I mitigate things like interest rates? I will have to do fixed to ensure that when the interest rate goes up or goes down, I'm locked in somewhere and it's not going to affect me and all that. So the next thing I'm also going to look at again, apart from that, is my location. I'm checking out, like I said, is the location right? Is it good? And is it growing? Do I have the employers on ground? Is it just one employer that is in that market? Do I have multiple employers? Because these things, they do affect, I was in a location in Maryland, and the name of the place is Cumberland. And guess what? Many years ago, that place was booming. But right now, it's like a graveyard. People have left. You have so many dilapidated houses there and all that. So these are things you need to start looking at before you even acquire those properties. So when I'm buying again, apart from that, I'm looking at the financials. So I'm checking my numbers. I'm seeing where they are currently at, where the market is at. Are there opportunities between both? So I'm not just buying property because it's beautiful. Like I was talking to someone recently and I offered two deals, one recent A class, another one C class. And the eye is wired to choose something that is newer and beautiful. And the person wasn't asking questions. I said, why are you choosing the A class? I said, because it's beautiful. I said, but you need to look at the numbers first to see the ones that will meet your need and all that. So I look at the numbers. Do the numbers work? Does it meet my own requirements? Does it meet my investors' requirement? That's one. I'm also looking at in my acquisition this time, I'm also looking at my capex. What is the capex involved? Because remember, the more money you are putting into a deal, the lesser the return. So the more leverage you have, the more the return. So how will a capex budget, the size of it, affect it? So I need to be very sure. So when I'm even at the beginning stage, I'm doing my due diligence. Those are things I'm checking out for, because any significant amount is going to affect the entire returns I said I'm going to give to my investors. So these things are done upfront before you close on those deals. So my acquisition process in a multifamily is very intense. In short, is more intense than anything I can say, because it must pan out. So those are the little things that I look at. Then after looking at the financials, I go to tour the properties. I don't tour the properties without looking at the financials first. I look at the financial. If there's a green light in it, then I call for a tour. Why am I going for a tour afterwards? I want to go and see, because numbers tells me stories. It tells me the plan.
True. Mhm.
So once I've seen the numbers, it tells me what I should look out for. I'm looking at the utility. Why is your utility high? Are you people doing ROBs? Are you doing all bills paid? What's going on? Is it individually metered? So the financials has told me that, but I need to go see it myself and ask those questions. Why is the utility high? Is there something that I should know of? So that's what helps me. So financials before a tour. Then after doing that tour, then we can now, like, depending on the numbers, I can decide to say, okay, I want to move ahead and sign a PSA. Regardless of the PSA, I still have to do a thorough due diligence. And one thing I will tell your audience is don't get emotional, because
Mhm.
all these things I've mentioned cost a lot of money. Due diligence costs money. Don't get emotional. If the deal does not work, it does not work. Just pull out. That's it. So, but
Yeah, I love that. Thank you so much. I know we are out of time. There's a lot more questions, but
yeah.
at this time, I'm going to ask you, share one golden nugget with my audience, like you didn't share enough already. Share one more golden nugget. Could be anything on your mindset or the work, or just share anything, like what is going to be the key takeaway from this conversation, maybe whatever you like.
My key takeaway, this is what I do. I don't know if you release directly to this, but if you are trying to get in on a table and nobody gives you the opportunity, create yours and bring people in it. So sometimes you have to, like I said, give yourself grace. If nobody's giving you the opportunity, create your own opportunity and create it and you do well. But before you create it, also have that humility with you and be ready to learn because it will take a process. The process of you moving from them not allowing you to you creating yours, use that time period of transition to go learn, equip yourself, be very knowledgeable, and then you can now create your table for others to come and join you.
I like that. If nobody's giving you the opportunity to create, just set your own table and invite people to join you.
Yeah.
Awesome. I love that. So this brings us to our vibe rapid fire round. I'm going to ask you 5 questions. So you know the drill. It's going to be 5 questions. You can answer in one word or one sentence
Oh my
only.
God, help me.
So are you ready?
I hope
Okay.
I am.
So the first question is, what is one of the most important thing that you've learned in your life, and how did your life change after learning it?
One of the most important thing I've learned, like I said, is education.
I like
Education helps. It just helps you it directs you. Let me put it that way. Education, be open to education.
I like that. Thank you. Share one good book that you like to recommend to my audience.
There's this book my dad gave to us. It's about mindset, the
Uh-huh.
battle of the mind, something like that. I can't remember, but that's the title. It's everywhere. I've forgotten who wrote it, but I read that book and it has a lot to do with the mindset, how your mind controls virtually everything that you do.
That's true. So in one word, what does life mean to you?
Life is an opportunity for me, and I'm grateful for it. So every day that you have, see it as a gift and keep moving.
Great. What is your biggest passion?
My biggest passion is I'm a Christian, so it's the love of Christ. I want to see that people people love God. That is it. That's my biggest passion. Then the second one is my kids. I want them to grow to have the opportunities I never had. I didn't grow with my parents, so I want that bond. Yeah, so that is my biggest passion is to see that they succeed with me in their life. Yeah.
Nice. If you could turn back in time and talk to your younger self, what would you tell yourself and why?
I think I would not change anything because I think those things I went through, then it might not have made sense to me. Might have looked like why. But I think it has really defined who I am and it has made me very principled and that is guiding me because those mistakes were actually, I'm sure if I didn't make those mistakes,
You would have been.
I would not be here. Yeah. So yeah, I'm happy for the past and I'm happy to make the future better.
I like that. Thank you. So how can people reach out to you?
Oh, you can reach out to me on my link tree. My link tree has everything. It's just a link tree / Bibi Ofiri or on my LinkedIn as Bibi Ofiri. Yes. LinkedIn is Bibi Ofiri. Or you can
Thank you.
follow me on my YouTube page or as a Blue Ocean Multifamily Group.
Thanks, BB. I'm really happy that you're here with me today. And I was really hoping for this informative or insightful conversation which we had today. Thanks again for joining today.
Thank you.
And yeah, thanks. And as always, for all my viewers, thank you for tuning into the Real Estate Vibe Show. Don't forget to subscribe, leave us a review, and share this episode with anyone who's looking to elevate their real estate investing game. Until next time, stay focused, stay inspired, and keep building your real estate vibe. Thanks again. Thanks, BB.
Thank you, Vicky. Thank you for having me.